All right, we're live. Hi, everyone. Thank you so much for joining our live panel discussion today. My name is Sofia Faustino, and I am the Senior Manager of Insights here at ChartMogul. And what does that mean is that I produce reports, industry reports on SaaS growth based on ChartMogul's real company data. So, what inspired us to do this this panel discussion today, which is focused on capital efficiency for bootstrap companies? It was actually our last report, which was focused on bootstrapped and VC-backed companies' growth. So I don't know if it's also my LinkedIn that has been pushing me a lot of bootstrap content recently, but I've been getting so much stuff about how bootstrapping is becoming trending. A lot of folks are revolving to choosing this route also to create their companies. So we thought, why not invite the specialists so that we can learn directly from them. So these are our panelists today. Unfortunately, we had another panelist that cannot attend, but we still have a lot of things to cover, and I'm sure it will be great as well. So, audience, if you have any questions, feel free to ask them. We have plenty of those, but we may have time for a couple of questions from you. You can write them in the corner here in the bottom corner in the chat, and we will answer them if we have time. But yes, let me start by asking our audience or our panelists to introduce themselves. So Tom, you can start. Tell us a bit about yourself and what do you do?
Hi there, everybody. My name is Tomislav. I'm an entrepreneur. I'm a CEO of Productive, which is a SaaS company, a SaaS business. We're a software platform for agencies, basically, and other consulting and professional services businesses. What we offer them is basically a tool where they can run their entire business in one software. So that everything from task management to budgeting, profitability, reporting, all of that good stuff that they need. It's a bootstrap business, obviously, because we're on this panel, and grew that to about 100 people right now, 100 employees, and kind of grew that based on my previous experience because I used to run a software development agency, which I grew to about 300-ish people, something like that. I've also invested in some startups. So I've kind of been on both sides of that fence, which I guess could be an interesting topic also. Yeah.
What about you, Dirk? Tell us a bit about yourself.
Hi, my name is Dirk. I'm head of origination at saas.group. In my former life, I used to be a mechanical engineer, started my professional career in the automotive sector, and then I would say through a few lucky coincidences landed in software M&A. So I'm now part of the M&A team at saas.group, and our goal is to build the biggest platform of independently run SaaS companies. So we acquire and aggregate SaaS companies, and I joined the company about 4 years ago. And since then, we've added around 20 companies, have grown our portfolio ARR massively, and the plan is just to continue on that path, add more and more companies. And yeah, why am I guest on this panel today? We are focusing on capital efficient companies primarily, which are mostly be found in the bootstrapper space, but we've also added a few VC funded companies, and the revenue sweet spot is between roughly 2 to 10 million ARR. So we are rather buying very small companies and have a strong focus on product-led businesses and horizontal business models, and have now family members in very different segments like HR, productivity, developer tools, and so on. So are still quite opportunistic there.
Cool. Thank you so much. Tom, my first question is for you. So I'm curious to know, why did you choose to bootstrap your company or any previous company that you also founded? So what was the motivation behind that?
So I mean, my first business when I started, I was like really, really young. I was about 19 years old, and which is 20 years ago. So if you could do math, you know how old I am. And you know, back then, especially where I'm from, Croatia, we really that was the only option, right? you couldn't. There weren't investors. There weren't VCs. Nothing like that existed. And the only way you could do it is basically by bootstrapping it. And it kind of just became part of my DNA, part of the way I do stuff. So when I started my second company, which is Productive, it was very natural to me and everybody else working with me to do it like that. Because, we've been always building businesses with our own money. And, you kind of get used to it, but there are also some good things you learn from it. And you kind of get used to the freedom. I think one of the reasons people like to do it like that is just the freedom route. They like to kind of be masters of their own destiny in a sense, which I don't know. I don't think it's always true. I think even with investor businesses, you can do it. You can have a certain amount of freedom, but I think it's just the feeling of it that people, like.
Yeah. And I guess freedom is one of them, but I guess also stress is another one, because at least sometimes I read about how stressful it can be to be a bootstrap founder, right? So especially in the beginning, probably.
I think it is. I think it's, but I think both of those things are stressful, to be honest. I think it's also stressful when you kind of get a large amount, you have like a lot of money on your bank account, and then you have to go fundraise, and it's not a good time for fundraising, and nobody wants to invest, and then you're just looking at the money, going out of the bank account, and I think both of those situations, they're stressful in a different way, but I think both of them are stressful.
Yeah. What about you, Dirk? Like, what inspired you to support bootstrap companies and founders particularly?
Yeah, so I mean, there are three German founders. They are tech entrepreneurs themselves, and I think they always built like bootstrap or at least capital efficient companies also before starting with saas.group. And what they noticed in the market, I would not even say capital efficient or bootstrap companies, but there are a lot of like indie hacker businesses. Let's call them indie hacker businesses that where the founders are usually techies and they are very good at building a strong product and getting first traction, but they struggle to scale the business. So they are very, very good at building something from 0 to 1, but then they struggle to get from 1 to maybe 5. And because they are so strong in product and tech, that's a very good starting point. But then, they don't manage to properly commercialize it, invest in sales and marketing, which is totally fine. So they stay within their comfort zone. But then they realize it themselves and usually look for an exit at some point, and then maybe start to build something new from 0 to 1. And this is basically our target group. So very good businesses, very capital efficient, very strong product, and then we can acquire them and help them get to the next level by supporting them with sales and marketing, pricing, and all the other things they are not as good as in tech. Plus, I mean, part of the truth is also that our model only works with capital efficient companies because we buy and aggregate capital efficient companies, and we use the cash flow to finance further transactions. So we just couldn't buy only growth oriented businesses with no profit margins. So on the one hand, it's required for our model. On the other hand, it's because where we see the most value add through our model.
Actually, talking about comfort zone, I mean, you just said that you work with both types of companies, right? But they are capital efficient. But this is a bit maybe controversial, but what can VC-backed founders, what can founders of VC-backed companies probably could learn from bootstrap founders? I mean, you work with both, but I mean, is there a specific characteristic that you see on bootstrap founders that you're like, okay, this is such a key learning?
I think there are quite a few things, but like the overlaying or the key takeaway would be doing more with less and investing primarily in things that have a high probability of success and a high return on investment. I think we talked about it with Tom before the session. So as a bootstrapper, you cannot afford to waste your money on things that may not necessarily work out, at least not a decent amount of money. And you see this with VC funded companies that you just tend to waste money on things that are not required to grow the business. I mean, just some examples like expensive retreats, expensive offices in the city center, swag, company swag, going to big conferences, paying for expensive booths, where the money is not earned back through leads generated and stuff like that. So, I mean, if you have that money on the bank account and investors force you to grow fast and exponentially, then you just try to spend it on things to run experiments. But a lot of these experiments may not necessarily be great in terms of ROI. And so I think that's definitely something that VC funded companies could learn from Bootstrappers. Also, I think especially this 0 to 1 phase, because I think a lot of VC-backed companies, they raise like a 2 million seed or a 3 million seed, and then they start scaling the team, but they don't even have like a proper product. And so I think reaching the 0 to 1 with a small team of like 5 to 10 people maybe, and then scale once you've seen first signs of product market fit, that's also something I think you can learn from Bootstrappers. Tom, anything you would have?
When you're running a bootstrap business, generally these people are like really good with money in general. So kind of with all their metrics and all their, like, they look at their CAC and their LTV and all this stuff, which, you know, maybe not so much as in other types of businesses, but just in general, good with money, because, you know, you have this amount of money, you have this amount of revenue, and that's it. There's no magical money coming out of anywhere. You have to work with this. So I think that's a characteristic I've at least noticed. And the other is that, you know, you're really working towards a very clear product market fit. If you don't have a product market fit, you're just going to die. And everything basically is around the product and the market. So it's nothing else, which is kind of to Dirk's point, right? You're not spending money on some things that are not important. It's like either product or market. So you get the fit.
Exactly. Well said. Absolutely. I guess also when companies raise that money, there's also a lot of expectation that they have to grow. So obviously there's always this experimentation and probably like spending money just to get to that growth level that you just said, Dirk. That's pretty true. But yeah, being good with money is something that probably everyone should aim for. Oh, sorry, Dirk, go ahead.
No, you mentioned stress earlier, which is also a good comment, because like if you're like a moral person or just somebody and you've raised money from like even angel investors or anybody, you have like a certain moral obligation, at least you feel it, to kind of return the money. And that's also a stress factor I've noticed with like some of the people I've talked to that have raised money.
Absolutely, yeah. And let's jump into a bit more like specific questions. So reflecting on the early stage journey of companies, Dirk, what do you think, or what have you seen in terms of optimizations that companies have applied that you think that had a tremendous impact in this bootstrap business? I mean, what was that impact, and what were these optimizations that you saw? And then Tom, feel free to reply as well.
Yeah, I mean, the two things we are very good at SaaS Group are also the two things usually our target group is not good at. And I would say it's pricing and sales and marketing. So a lot of founders we talk to, and I mean, that's actually a potential or a lever we have once we acquire the company, if the company has never changed their pricing or has never experimented, never raised their prices. So I just recently talked to a company that was able to raise their ARR by 20% just by deep grandfathering old customers, so bringing them all to the latest pricing. And a lot of, for a lot of bootstrap companies, they don't have it on their radar. It's not a priority. They maybe also don't feel comfortable raising their prices because they think it will, end up in a higher churn or whatever. So I think changing and experimenting with pricing on a regular basis, and also raise your prices when you add new features. Now, I think we will also be talking about AI. There's an additional monetization opportunity through AI features potentially. So pricing is one, and the other one is marketing. I mean, a lot of bootstrappers are very, very good at SEO, but they usually burnt their fingers with paid ads once, and then they've never done it again. So I think there's also an opportunity to, build internal resources, regarding paid ads, and also experiment with that, and keep that on top of your strong SEO strategy.
Tom, what do you think? What are your thoughts? Do you agree with Dirk?
Yeah, I think that tracks, I guess. I think one thing, it's more around like how to, I think the question was how to optimize, right? So what can you do in terms of optimizing? Just I think proper planning is something that not a lot of, because like when you're a VC or any type of like investor-backed business, you have to do some sort of planning. You have to do a business plan. You have to present it to somebody. Somebody goes in and sees it and comments on it and says this is good or bad or whatever. If you're like a founder, or maybe there's 2 or 3 of you and there's like nobody else, you're maybe not even used to doing it, not used to doing planning, not used to doing any sort of metrics. I don't know. I'm just guessing, but also Dirk probably sees that when talking to companies. Maybe they don't even have any metrics. They don't look at like all of this stuff. So just tracking this stuff, like just proper planning of. I think the most important thing to plan is cash flow, basically, especially when you're like a bootstrap business. Just do like a cash flow plan. And the good thing about SaaS is that it's pretty predictable, right? You can just plug in some general assumptions, like we're going to grow this much month over month, we're going to churn this much. And if you've been running the business for a while, you can more or less project this stuff out. And then loop in all the other costs you have. Hiring is usually the biggest one. So for that, we do like a hiring plan. It's not overly complex, but we do like a 12-month out hiring plan. So we would say, this is who we're going to hire, not the actual person, but the actual position in the next 12 months, the costs, and just plug all those things in, factor in any sort of churn, both in like revenue or customers or people. Somebody might leave, so also factor that in, and factor in a buffer and say, I might be 20% wrong with this, or 10%, whatever you think it is, and just do like a simulation of that and just refresh that every 2-3 months. And I don't think a lot of people do that, and I think that's really, really important. And that was a really, really useful thing for us. And we just kind of refresh it, and then we see, can we more invest in this or that, or in paid ads, or in hiring, or what happens if we don't grow, then we need to do this. And so yeah, that was a really useful thing for me, and kind of opens your mind and also forces you to answer all these questions to yourself. Who are we going to hire? And if you say we're going to grow this much in revenue, yeah, but can we sell this much? Do we have enough salespeople, et cetera, et cetera? So it's kind of like, it's a proxy to everything else, basically.
Do you have Dirk, were you going to say something?
I just wanted to say, yeah, that's, I think, a big advantage of VC-backed companies, because independent of whether your VCs are adding any value or not, but you have certain reporting obligations. And so you just need to reflect on what worked well, what didn't work well, why, and then just track your metrics and send it to your investors. And so I think it definitely helps. Because what you said with metrics tracking, I met a lot of founders that are basically running their business on gut feeling, which is great. I mean, for me, this is quite impressive. I'm a numbers person, so this is quite impressive, but it doesn't help you for strategic planning. So I would definitely agree to Tom to just properly track your metrics, and to also reflect on a regular basis, so that you can plan in advance and maybe make strategic decisions that bring your business forward.
Yeah, and I mean, whoever is the owner of your business, could be you, your team. Maybe there's somebody who's not even working in the business anymore, but still owns. So just treat everybody like an investor, and do like a report every 6 months, 3 months, or something like that, or a year. I don't, but a year is probably too rare. And just treat them as if they were your investor, which kind of they are. I mean, they're a shareholder, which is more or less the same thing. And just get into the habit. And it's always hard, but once you get into the habit, in my experience and the experience of some companies I know, it just gets easier every time. You can do it like very quickly. It's just people are lazy because nobody forces them to do it in a way.
Yeah. And Tom, you were talking before about expanding their teams. And I guess this is also, I mean, this is a challenge for everyone, right? Whether you're VC-backed or bootstrap. It's not like you have all the money in the world and suddenly all your solutions appear. But do you have any specific examples from the past, or a specific challenge that you had when you were trying to expand your team with such a tight budget? Let's put it this way.
I think the biggest problem in general is just like onboarding of people. At least that's something that we feel, because our product is pretty extensive. It's pretty broad. It covers a lot of things, and people that you're kind of maybe hiring don't fully understand, like, not just like, let's say it's an engineer, that not just the code, but like the whole point and why it's doing something that it's doing. So a lot of these problems are around documentation, onboarding, and that's just the product perspective. That's the whole cultural perspective. How does your company work? How do you think about things? How do you talk in your office? Do you even have an office? Do you talk in Slack? How do you talk in Slack? Like all of this stuff, and it's a very slow process in general. You can't get somebody onboarded in like a week or something, especially not to the cultural and the deep like domain knowledge of your product. So it takes a while, and you kind of have to factor that in. Like, and sometimes I think maybe people get nervous and they hire somebody and like expect them to, start being like really efficient from the first day and start, earning their salary if you're on a tight budget. So just don't hire a salesperson and expect them to sell on the first day. You need a ramp up period. Put that in the thing I mentioned earlier, in your projections. Just all of these like little things that kind of factor in. But yeah, I think the biggest learning for us was just kind of like the whole onboarding is longer than it takes, and you can work around it, but it's never going to be quick. So.
What about you, Dirk? What have you encountered with the companies you worked at?
Talking about the VC-backed companies, at least if they haven't grown exponentially and somehow failed as a VC-backed company, I would say they could still become capital efficient, sustainable businesses. But I think a lot of them are not used to make hard decisions because they started off in 2019, 2020, when growth was a bit easier. So I think also just realizing that it didn't work out and that you need to cut back. Everyone was complaining about the huge layoffs during that time, but it was just necessary to bring the companies to a more sustainable path. And I think from my perspective, we see a lot of, let's call them lifestyle businesses that are run without growth, but also without profit margins, and with a team that has a great culture, but not really high performers. And so I think, it also depends on your ambitions. But if I then talk to the founders and I tell them given your revenue size, we usually see smaller teams. They know it, like they know they run a lifestyle business, and they know it's not like generating the output that is expected from them, or also not the output that satisfies them, but they are not able to change it. So I think that's one. And we see that SaaS Group, how efficient companies can be. So I think our biggest company is at around 10 million ARR, and it's running with a team of less than 20 people, I think. So very, very capital efficient. And I think a lot of founders think, in order to grow to the next level, I just need to add more people, and they tend to hire nice to have resources rather than must haves. And I think there's a quote from DHH from Basecamp, who says like it really has to hurt not to have this person on your team. So it's not that it would be great to have another salesperson in the team. So it really has to hurt, and someone has to be stressed out or so. And then you add one more. At least as a bootstrap company, I think as a VC-backed company in the early stage, you need to scale in advance a bit. But I don't know. Tom, would you agree to it?
I agree to a certain point to your stuff, but I think a lot of VC, when it started with the layoffs, a lot of it was just like mimicking what everybody else was doing. So I think some companies really had problems, but there are a lot of companies just started laying off people for just everybody's laying off 10%. We need to lay off 10%. And it's probably the same thing when everybody's hiring. Then you need to be like, nobody's actually not nobody, but you understand what I'm saying. That there were situations where people were just laying off people on random, and I don't think I don't think you should. Basically, my point is, don't hire people randomly. Have a plan, and don't fire people randomly. Also, have a plan. That's at least the way I think about stuff. And it probably goes back to the whole story I was talking about earlier. Just make a plan. What's your 12-month plan? Refresh it and think about it. Yeah.
Definitely. And talking about planning and the team size, I also wanted to touch a little bit on the tech stack. So Dirk, this question is for you. So what challenges have you seen, do you see in the Bootstrap founders, or what do they struggle with when they are choosing their tech stack? Is the capital efficiency a priority? Is it on the table from day one, or should it be?
I would say in terms of tech stack, it's not necessarily a priority. I mean, to give you one example, we acquired a company called Pre-Render.io 3 years ago, and it was generating 2 million ARR, one-person business, and 1 million went to AWS every year. So I see a lot of companies just because they are in such a comfortable situation. I mean, the company is still highly profitable, right? They don't need to necessarily cut back on such things and really be cost conservative.
Did you make them buy servers now?
Yeah, we transitioned to a bare metal system, so it's now I think 150K, 200K from 1 million. So yeah, I mean, this was like the number one priority when we acquired the company to do this. But also in other areas, I think the founders that are attending here are already one step ahead, because many Bootstrap founders, indie hackers I know, don't have a lot of exchange with other founders, so they are within their small bubble, and they are more like introverts, tech people, and they tend to sometimes build their own systems internally. I mean, I also saw founders having their own server racks in the office, or they have their own metrics tracking system, or they are using a legacy metrics tracking system, which is not properly tracking SaaS metrics and stuff like that. So I think, yeah, there are just like good out-of-the-box tools that don't cost you much, like, for example, ChartMogul for metrics tracking, Stripe for billing, and all that stuff that you should just use, because there's no need to build this internally. And usually, at the latest, when you approach an exit and we ask for proper SaaS KPIs, you struggle to provide them. It creates a negative bias, and it may even lead to a deal fall apart, because we can't evaluate your company properly without having the right numbers. So I think if there's one learning, I would say, don't try to build your own proprietary system. Focus on building a strong product for your clients, and use suitable out-of-the-box tools for all of the rest.
Yeah, absolutely. And also, going back to the new business growth, we know that it has slowed down for everyone, growth in general, but also new business. That's what our report actually just showed, so that new business now is growing around 3 to 5% for Bootstrap and VC-backed companies. But before it was growing, I mean, like in the boom area of 2020, 2021, it was growing at 20 to 30%. So my question is for Dirk first. So what sales challenges are the founders and teams of the companies you work with currently facing, and what changes have they made you adapt to? Have you seen any particular strategies or things that they need to change in order to adapt to the new normal?
Yeah, there was just one interesting story of a founder I just talked to yesterday, because it's worth sharing. So they are charging like 10 to 20K annual contracts, and during boom times, a lot of company credit cards allowed for this amount of invoices to be paid without any notice to the finance team. And now all of the budget of individual credit cards were, at least at some companies, got lowered. So the threshold is now much lower, and they just can't pay the annual contracts anymore. So actually before that, they were trying to upgrade a lot of clients to annual contracts. And now they're actually leaving it as is. And just, I mean, it's worse because you have more clients on monthly contracts, which might have an impact on your retention. But in this case, it even helps them because the invoices are not triggering any notice to the finance team, and therefore it just runs through without anyone noticing, which is an advantage for them. And I mean, for others, I think, in a broader sense, Bootstrappers reacted faster to that whole situation. So I think they focused a bit more on maybe cost-saving projects or focusing more on product and decreasing their sales and marketing spend. And it's a small sample size, I have to admit, but with VC-funded founders, they are still spending a lot to get back to old growth rates, whereas bootstrap founders tend to be more resilient and focus on other areas instead for the time being.
That's exactly what we saw in our data as well. During when the crisis or the recession started, let's put it this way, it was true that the growth slowed down very quickly for bootstrappers, but then they were able to stabilize growth like super fast. Whereas for VC-backed ones, I mean, it was a bit more gradual. What about you, Tom? Do you agree with Dirk's experience, or do you have any first-hand experience that you want to share? Did you have to adapt your sales strategies as well lately?
Well, yeah, I mean, it has been in the market, everybody's feeling it. There's been a lot of this, let's say, protracted decision making. So just decision making has been taking longer and longer. And everybody's kind of feeling it, and everybody cares about saving money these days. So it's I would say, a normal thing. I mean, the way that we kind of approached it in general, but in general, we didn't change our tactics or what we're doing a lot. Like, we've been still doing the same thing. I think that was the main difference between, let's say, a bootstrap business like us and maybe somebody else that had to cut and, fire people, is that, we were just kind of doing the same thing. This is the amount of money we have. We could spend only this. There's no more. But in general, we've been trying to kind of help out our customers. I think that was the mainly flexibility. So I don't know. You had these particular pricing. I think it's more around pricing and packaging and stuff like that, where you can actually help out your customers. You need to be careful. Obviously, you don't want to kind of diminish the value of your product. You don't want to lower prices or do something like that. I mean, maybe you should. It really depends. But you need to, I would say, rethink that whole thing. And if you can be flexible with somebody, pricing plans, or I don't know, contract sizes or anything like that, I think that was cool. That helped out our customers. They were like, hey, this annual plan, isn't working for us. It's a big cash flow burden. Can we, I don't know, get the same terms on some other deal or something like that? So yeah, those are some of the situations we tried.
Yeah. And Dirk, you were also saying before that sometimes you think that maybe bootstrap companies, not all, but some, they are a bit resistant to changing the pricing strategies. Was this something that you actually saw more of a change now with this recession? I mean, and did it work? Do you know any situations where folks were experimenting and maybe being a bit more flexible with their customers?
Yeah, I wouldn't say that there's a clear pattern like that. Everyone just switch to two other focus areas like product or upsells or whatever. So I think every bootstrapper or every SaaS founder approach it differently. I mean, many try to work on their churn, on fixing churn and increasing retention, because that's usually what's recommended when new MRR is slowing down. On the other hand, I think, I don't know if it was your data or another report that showed that expansion revenues also, or companies are struggling to generate additional revenue through expansion because, the budgets are just tight at the moment, and nobody wants to increase seats, but rather decrease the number of seats or downgrade or stay as is rather than upgrading. So I think, While many founders try to work on their retention, they also struggled on that front.
Yeah, what we saw with the retention, at least with the benchmarks in the data of ChartMogul, not specifically to Bootstrap or VC-backed companies, that especially companies with higher ARR, you could already tell that they were increasing their NRR already, like back in 2020, 2021, and right now it became actually the growth driver, where it's more prominent to drive growth. And I think. Yeah, we have here a question, I think, from our audience. So do you think that, I think this one is for Tom. So do you think that there's a risk in being more flexible with pricing for sales teams, given that much of their salary is commission-based? How do you manage that?
I mean, in the end, the sales team wants to sell. So yeah, they're going to try and sell, because that's if they don't do a sale, then they're going to get zero commission. And if you give them more flexibility and there's trust in you and the sales team and the way that it works together, they're gonna, at least in my experience, pull out the best option to close the deal. And if that means more flexibility for the customer, then be it. I think those are the times we're living in right now, where you need to be flexible to whoever you're selling to.
Dirk, do you want to add on to something?
That's my opinion, at least.
Yeah, I think it's definitely not my field of expertise, so I can't really comment on it. I mean, most of the companies we work with are serving SMBs, and they are product-led companies. So they don't really have sales resources. They only have like maybe one end-to-end sales or customer success team who's taking care of upsells and so on. So it's a bit different in our case. We are still working with discounts and trying to get clients on annual contracts and so on, but I just can't comment on how to train sales and how to work with discounts.
No, makes sense. Yeah, let's actually change the topic to one that you pushed. You both talked about quite a lot in one of our last calls. So about financial options. So my first question is for Tom. So in our call, you were saying that how there are options also for Bootstrap founders, especially when they are probably ready to scale. So have you ever been in that situation where you had to find external funding, and what was that situation about?
I mean, when you talk about options, there's always options of like loans or various types of like loan finance. And, depending on where you're located, depending on the size of your company, depending on what you can offer, they're better or worse to a certain extent. But I think it's worth looking into, because if you really want to stay bootstrapped, but you need because I've seen situations with companies that could really use some additional money to fuel their growth, but the founder's identity is so much tied into like, yeah, we're a bootstrapped company, we're never going to change. And they're kind of holding their company hostage in a way. That's at least how I sometimes see it. So like, I think it's your like duty as the founder to that company and to the team to kind of do the best job you can in a way. So if that means raising money from like investors, that's cool. If that means finding a loan or certain type of things. And I mean, in the past we've done different things. We've loaned our own money to the company, like if we got a situation where it made sense. So yeah, I just want to say it's kind of I think people sometimes it basically becomes like part of their identity. I'm a bootstrapper and that's me, and I'm never going to be anything else, or I'm never going to. And I think that's cool. I think it's cool to have an identity, but also think about like, are you like too far off? And what's the best way for me to do whatever I want to do? I want to build this product and this company, and there's a mission I want to solve in the world. And what's the best way to do it? Is that for me to be bootstrapped? Cool. But if there's something else, also cool.
Dirk, what about you? Like, what is your advice also for these founders that are looking for, that probably are struggling with looking for external funding? And what other options do you recommend, or do you see that are most successful probably?
Yeah, I think that many founders only know two routes. So one is bootstrapping, and the other one is just raising VC. So I think that was also one of the takeaways of our previous discussion, that founders, I mean, as Tom said, it's good to have an identity, but I think founders shouldn't be super dogmatic about it, because I mean, sometimes it's also depressing that you see, okay, certain acquisition channels are working, but you lack the capital to maybe grow faster. So I think if you nailed product market fit and you're growing and you think like, hey, I could grow faster if I had additional capital, then it totally makes sense to look left and right if you can raise capital. And I mean, it doesn't necessarily mean you have to give up your freedom. I mean, there are lots of revenue-based financing providers, debt providers. You can raise a traditional bank loan or whatever. So there are definitely ways. There are also more and more bootstrapper-friendly investors popping up who are a bit more patient and who don't take a huge stake of your company. So there are definitely options left and right, and you should evaluate all of them and see which is the right one. I mean, revenue-based financing, from my perspective, it can be quite expensive. So I don't know if it's the right way, but if it can give you an additional boost, and if you think, okay, easy for me to pay it back within a reasonable time period, then you should still consider it. And then you have revenue-based financing plus certain value adds. Yeah, and just like other options. And I saw many founders, bootstrap founders, that scale to 5 million ARR, sometimes even higher, and during boom times raised big rounds. So instead of selling their business for, let's say, 20-30 million, they raised 20-30 million, but they couldn't make that switch in terms of mindset from like, hey, super capital efficient growth to growth at all costs, which the investors required. And so they basically destroyed a really good exit now because now their company hasn't grown exponentially, and they have a 30 million liquidation preference stacked above them when they approach an exit. So they are now getting much less than they would have gotten 2 years ago. So it's really like, I think it's hard switching from VC backed to bootstrapped mode, but it's also hard to do it the other way around. And also, some founders that I talk to, they say, yeah, we might be open to raising a round or an exit, depending on the options that land on our table. I think that's definitely not the right way. So I think that's two completely different things. And also many founders think, okay, we are growing 20% and now we're raising 5 million. And then all of a sudden we're growing 100%. So I think you should have figured out how to grow fast before you really raise capital and potentially dilute. Tom, I think you wanted to say something.
I agree with you completely on the part where like you raise a bunch of money, but you've been bootstrapped, and now like your whole habits are completely different than what you're supposed to do now. And people don't get it, and I think it's hard. I think it would maybe for me hard, like if I were to go down that route. So I can kind of feel what you're saying, right?
Absolutely. Well, I think we have time for one more question, actually, and this is this is our ending question, actually. So, first one for Tom. So, if you could go back in time with your experience, what would you tell your younger self? I mean, what would you do differently? And for Dirk, a similar question is like, what do you hear from the companies you worked with if they look back and they also think like, I should have done this differently as well?
So I don't know. I used to, like before this, I used to run another business, which was like a services agency business, and kind of out of that bootstrapped the other business out of the money I made from there. And to a certain point, we're running that in parallel, and then I just stopped doing the one thing and did the other thing. And if I were to go back and talk to the old me, I would probably just say, you can do this sooner, you can do this faster, right? So I kind of did two things in parallel for way too long, and I wouldn't recommend that. Just focus on one thing and just do it really, really well. So in general, I would just trust my gut more, because usually if you're like a good entrepreneur, you can trust your gut in most situations. So I would just trust myself and my general judgment and just go for it.
Yeah, so I would say the first one is VC-backed founders that fail to grow exponentially regret taking VC in the first place. So that's one. But I mean, it's just a big bet. I I mean, I don't want to judge here because I think it's still worth taking the bet if you think the opportunity is big enough and you want to go that path. It's just that the bet is a bit higher and the risk of failure therefore also a bit higher. But I think there was also a recent article published by SaaStr where they did a survey amongst second-time founders, and they all said like, yeah, if we could go back, we would bootstrap the first company. Other things, I think, I mean, I have a lot of exit conversations, so it's more related to M&A and potentially selling your company. But many notice a bit too late that they've been chasing a carrot, and that basically their gut feeling told them to exit a bit earlier. Because, as I said, many feel comfortable building something from 0 to 1, but then they're just desperately trying to go from 1 to 2 or to 5 and fail and run the business for like 10 plus years, even though they should have exited maybe like 5 years earlier. So I think that's one thing I hear quite often if I talk to SaaS founders about an exit.
Yeah, absolutely. So I think we are out of time already. So I wanted to thank you both for attending this panel and our audience as well. And I definitely I'm leaving this conversation feeling very energized and inspired by your comments. And if you have, for the audience, I mean, I know you asked some questions, so if you have any additional questions, we're going to try to answer those. If you have any feedback, please send it over to us. So we're going to attend to those as well. And again, the recording will be available right after. And if not, follow us on LinkedIn and on YouTube, because we will be sharing this content soon. And yes, thank you again, Tom and Dirk. It was a pleasure.
Thanks for the invite.
Yeah.
Bye.
Thanks for having me.
Bye-bye.
Bye.